Hello, my name is Philip Totaro. I'm the founder and CEO of market research firm IntelStor. Welcome to your weekly dose of truth to power. Truth to Power examines data driven insights for the energy sector with a focus on renewables. On this week's episode, we're looking at the election outcome in Australia and the likely impact on renewables. Well, if you're looking for some positive news for the renewable energy sector recently, then the outcome of the Australian federal election is hopefully going to put a smile on your face. Labor's massive and somewhat surprising victory in this federal election has been viewed by the renewable energy industry as being a tremendous opportunity for renewables to flourish. At this point, the industry is encouraging the government of Prime Minister Anthony Albanese to speed up the process for renewable energy development and integration into the grid. In particular, the industry is calling for the implementation of a consumer energy storage policy that could help offset some of the curtailments and negative pricing events that's due to, the significant amount of rooftop solar that they have in Australia that usually creates what's commonly known as this duck curve in the middle of the day. But beyond that, transmission deployment is probably the next most important area that requires attention and investment to really provide stability and growth for the renewable energy market in Australia. IntelStor is tracking more than 4,500 kilometers of transmission that's in the permitting queue that's going to be required in order to meet the 82% renewable energy target by 2030. Offshore wind permitting also requires some attention. To date, only the Novocastrian project from Equinor and OceanX Energy has been awarded a feasibility license, but at least four other offshore wind projects have withdrawn from the permitting queue due to a lack of time horizon for receiving an approval, as well as a lack of clarity on some of the cost allocation, transmission availability, as well as power offtake. So, with all that at the front of our minds, I'm also pleased to report that based upon this election outcome, IntelStor can reaffirm our market forecast for Australia. Specifically, we're looking at a total of 115.8 gigawatts of onshore and offshore wind by 2035. Western Australia is poised to lead the market, but they will need more transmission infrastructure to be built in order for this to be achieved. Also, for the sake of transparency, this forecast is dependent on having market clarity for the projects that are proposed for hydrogen generation and production. As of today, we believe that most of that capacity is unlikely to see a near term build out, mostly due to a lack of demand for hydrogen for industrial purposes, and that's reflected in our forecast. While proposals have been made for the use of hydrogen for vehicle fuel through the production of green steel or even as an export gas, we're not seeing a significant demand increase for hydrogen as yet. Now, as most of you know, beyond our traditional forecasting capabilities based on our full project database and our project status tracker, we also look at asset profitability. We can see the impact of wild price volatility as well as the impact of consumer based solar systems on the utility scale market demand and power generation market overall. Based on data from the Australian NEM and combined with our own sophisticated project pro forma models, we're able to see that total revenue per installed megawatt in Australia was just over $1 million based on data through the end of 2024. Net profit through the expected end of asset life was just under 625,000 per megawatt. By comparison with a market like the United States that is a bit lower by about $200,000 at least. A total of 79.6% of assets are now poised to turn a profit. That's up from 63% just over a year ago. And while that sounds like a promising improvement, the price volatility in the market exposes any renewable energy asset operator to these wild swings in asset profitability through the end of planned asset life. One year you could be negative, the next year you're positive, and you swing back to negative again, depending on that wild price volatility. This is highlighted by the fact that only 34.12% of the operational capacity in Australia operates at or above a P50 energy yield, while about 46% operates at or above a P75. That is slightly concerning for asset owners and hopefully a wake up call to improve maintenance practices. Experienced service providers from all around the world are available to assist, and IntelStor can help make those connections. While we acknowledge that the profitability question is more tied to power pricing rather than asset availability in Australia, owners and operators still need to ensure that they have done all that they can to get on top of their technical performance. Maintenance costs per megawatt hour produced are almost comparable to other global markets at $6.42 per megawatt hour produced. That's in US dollars. We converted it to normalize. But that's as compared to a market like the United States that has 10 times more installed capacity. We have $6.38 a megawatt hour. So fairly comparable. I hope you enjoyed this episode. We also welcome you to register your interest for the next Wind Summit event in Melbourne, Australia, to be held in February 2026. More details will be coming at the end of this month, including an announcement of the event venue and the title sponsor. In the meantime, for all the latest information, you can visit www.windsummit.org and register today. Thank you for joining me this week. I'm Philip Totaro, and this has been your weekly dose of truth to power. Follow us on IntelStor's YouTube channel as well as your favorite audio platforms, and visit www.intelstor.com to join more than 200,000 subscribers to our renewable energy data solutions. A full analysis of the market dynamics in Australia and the rest of the world is available to IntelStor data platform subscribers.